Hello, good afternoon, ladies and gentlemen. Welcome to this paper discussion. I'm Erfan, Gen AI engineer with experience in data infrastructure. I also delivered a couple of financial and blockchain solutions end-to-end, specifically regarding risk management and portfolio management, and also liquidity provisioning on top of DEXs. So I'm really glad to be here today, and I really appreciate Vara and P2P Financial System to having these events as well. So in this paper, I'm going to cover a couple of different topics. First, I will start with introduction about CBDCs, and then I will cover different challenges, financial inclusion, and also at the end, we will cover some of the case studies that we have so far in the global economy, and also their contribution actually. So let's start with CBDC, and let's define what exactly is CBDC. So CBDC is state-backed digital money that's built for a contribution on each nation's economy. So as you can see, right now, about 98% of the global GDP are exploring CBDC for different aspects. And this year, digital yuan just hit 7 trillion yuan transaction, which is really considerable. And as you can see in this chart, so as far as we are going further and further, we are seeing this increase regarding the CBDC exploration in different nations and economies. Let's talk about financial inclusion. So how CBDC can contribute on financial inclusion. First of all, let's consider CBDC as a separated financial services. So CBDC can give different individuals and economic kind of player direct access, and by its nature, it has lower transaction costs as well. Plus, regarding the maintenance and infrastructure, it can be maintained very, cheaper as well, because comparing this concept with traditional finance that we have and all of the sophistication that we have in traditional finance, you can see how it can easily manage the whole cost flow as well. Also, it can enhance the accessibility, again, because of its nature, right? So you can easily access to all of the services of central bank with just your wallet. You don't need to go through different procedures to have access to high-level type of financial services. Regarding education, specifically with recent solution that we have in Gen AI, and also in leveraging Gen AI for creating customized type of education per use case, per user in different economy, so we can also kind of facilitate this topic as well. So adoption will be more straightforward for different individuals. But it's not all about that. For sure, we have some concerns and some challenges. So, we can, define different challenges based on different perspectives. But the main challenges that we have is regarding operational risk and security, privacy, and regulations. Let's discuss a bit about privacy and regulatory challenges. So, before that, based on the research that we had, and also the data also available out there as well, right now we have about 1.7 billion unbanked kind of individuals around the world. So let's consider this. What are the privacy and regulatory challenges? First of all, so because of the fact that we are talking about central banks, and if you wanted to use any services there, you should be KYC. And going through the KYC procedure is a bit challenging because you need to share all of the data. And also another challenge that we have, let's say another concern that we have publicly is maybe people cannot trust that much to share their data. It's not about the actual central bank that they are interacting to directly, but also assume they wanted to have some cross-border transactions. So they should be able to share their KYC, let's say, type of data with the secondary kind of government as well, or let's say central bank. But we on the industry about that, like ZK proof algorithm, for kind of authenticating different user without compromising the confidential data as well. So we have different solution on DeFi for this, and we can somehow basically cover this problem. But again, it's a challenge. Another one is kind of, so technically, based on the sophisticated compliance framework that we have currently on a traditional finance, so onboarding this whole, let's say, solution, blockchain-based solution for CBDC to the actual traditional finance can be really challenging. So, because again, most of these compliance functions are not built for this kind of mechanism. So we need to either update them or have a different flow for compliance of this stuff. Another concern is international transaction or cross-border transaction. So we need to be able to answer this type of question. Who is responsible for the transaction if I wanted to send any specific transaction from country A to country B? Who should be kind of responsible for that? Based on which law we should, basically follow up that type of transactions? And another type of challenges that we have is security and operational kind of concern and challenges. So let's talk about cyber threats. Again, blockchain by its nature, it's secure. But again, blockchain, based on its nature, it can be vulnerable as well, right? I want you to recall the basic incident that we have in Uniswap, SushiSwap type of interaction, or some of the incident that we have previously, like Ethereum. Right now we have Ethereum Classic, right? So all of these type of vulnerabilities and also attacks can be happen in the CBDCs as well. And we should have some different policies for that. But anyway, based on the recent achievement that we have in different LLMs, we can somehow address this problem based on ongoing monitoring. So technically, we check all of the transaction in a real time, and also we can easily cluster different transactions and classify different transactions based on the LLM. Actually, recently we have a different nice large language model regarding finance, which is fine-tuned based on the actual transactions data as well. And all of them are open source, by the way. Another problem, technical risk. So again, blockchain is not a solution. Blockchain is actual infrastructure. So for enabling all of the different financial components in the whole economy to be able to interact with each other, we should provide this infrastructure. And right now, based on the current financial infrastructure that we have for all of the different financial services, we need to kind of either refactor all of the things that we have or make this transition a bit easier, which this is one of the biggest challenges at the moment that we have. And also interpretability. It's easy to track all of the transaction and also understand which transaction, what was the origin and destination. But if we wanted to explain this transaction for either compliance purposes or even for tax purposes, it will be a bit challenging. But anyway, it will be more straightforward compared to TradFi. Security and privacy problem. Again, regarding the regulatory compliance. So for example, in Europe, we have a different data policy. In whole GCC, we may have a different data policy. If I want to have a transaction between UAE and, let's say, Germany or some country in Europe, right? What type of data should be shared between different central banks, right? And what are the policies? So, and also even regarding the actual transaction data within the CBDC's actual blockchain, right? So does the secondary type of, or let's say the destination country need to have access to the whole transaction that we had in the origin blockchain or not? Because again, it's all about the data problem that we may face in future. Business continuity. All of you recall the Luna incident, right? So technically, we should have a different type of business continuity solution to cover the whole ecosystem based on those type of, black swan type of events, right? If I just wanted to give a brief about the then, so Luna had one stablecoin which was UST, right? And it was heavily pegged to Luna. Technically, all of them was for Terra ecosystem, right? And when Luna failed, UST failed as well because of that heavy kind of correlated lift pegged problem that they have. So we should have a specific type of compliance and rules and policies to cover those edge cases. And also regarding international collaboration, it's like daylight in the cars, right? We should have some international type of, let's say, law type of frameworks for CBDCs. Then it can, enable all of the countries and economies to follow the baselines at least, and the interaction will be more smoother. Let's talk about some theories, right? So how CBDC can impact money supply and demand in the whole economy. So as you can see, based on the theorem of money, so we can manage the money supply and the goods price. Also, we can manage the demand as well. So based on the fact that CBDC, again, it could be one smart contract on any EVM, open source EVM-based blockchain. So minting function, or let's say creating a new token or printing digital money can be easy, and it can directly affect the whole economy and consumer behavior regarding the saving and also spending. And again, based on the fact that this can affect the actual velocity and also the actual goods price as well, it could be, reverse-wise as well. It could manage the whole economy to not collapse in a, let's say, critical or crisis situation. For example, so based on this straightforward, so if you just increase supply, the price of different specific goods, based on the assumption of having constant velocity, can increase as well. Let's go through the case studies. Also, yesterday we discussed about eNaira in Nigeria type of stable coin or CBDC as well, which is a really good case study that, we can learn a lot from this. So it introduced in October 2021, and the objective was financial inclusion, right? So they have some specific economical utility for people to enable them to be onboarded on a whole financial, interactions, right? And an interesting point, first of all, so they onboarded 47 million unbanked. So let's continue. So it onboarded 47 million unbanked people, right, within the first year. And also the mobile adoption increased 30%. So it's huge, regarding the microeconomy as well. And also regarding the China digital yuan, so it tells us that if we wanted to onboard CBDC on nations, right, we don't need to basically start big for big type of economical transactions, right? Or different, the biggest type of entity. We can start very small regarding the transaction amount, right? We can start with onboarding, for example, in UAE. Assume we have a eDirham, we can start onboarding eDirham to Knoll cards. Then we can start onboarding that on Kareem, then Noon.ae, then Amazon.ae, right? So technically, we can start very small, and gradually we can adopt, the whole country or different countries based on that small steps as well. So monetary policy implication of CBDCs. Let's discuss about that. So first of all, because of the fact that we have a real-time data analysis, and based on the LLM models that we have right now, and leveraging AI and classic ML, and also again generative AI as well, we can easily check different criterias and also learn from the data pattern. And it's not about that. We can make kind of more accurate decisions, and also we can update different policies based on the ongoing data monitoring as well. Plus, regarding the interest rate, CBDC can directly, I mean, let's say without less hassle, it can, change the interest rate, which can be affected on consumer, spending and saving behavior as well. And also regarding the financial stability and crisis management as well. So, for example, assume we are in the COVID, talking about that COVID, time, right? So when we are talking about CBDCs, so central banks can directly inject money to different, economical player directly without, having intermediate type of banks and commercial banks between. So they can easily, start continuing their business because they need some money, right? So it can really handle the crisis when we are in that as well. And also regarding the mitigation of bank runs, people trust, individuals really like to hold the CBDCs instead of, having account on, let's say, Silicon Valley Bank, right? Because they trust on central banks more than, those commercial banks. But again, it's not the end of commercial banks. Okay, if I wanted to map this whole CBDC kind of area with the actual DeFi ecosystem that we have, in actual DeFi, we have the founder team and main developer team, right? Then we have a blockchain, then we have a smart contract on top of that. Then we have a different developers that can develop on top of those smart contracts or based on those smart contracts. And at the last layer, we have basically users or consumers, right? The same thing is we have in CBDCs as well. So the main developers, let's say, or the main foundation is technically central banks, right? They can have their own private type of blockchain, and they can use or consider the actual CBDC as their main token of that blockchain as well. And different commercial banks can develop on top of that blockchain. So technically, commercial banks can easily develop and offer different type of financial services, and it can be easily accessible through different portals as well. So it's not about end of commercial banks, it's about shifting in contribution, how commercial banks can contribute in actual, monetary type of ecosystem. So recommendations. Based on the research, we really need to develop comprehensive regulatory frameworks that can be accepted through different nations and different countries. We need to promote collaboration with stakeholders. Really, we need to have a bigger budget on financial years for blockchain and different transactions, because it's really necessary. So all of the businesses, again, it's not about financial concept or financial services. The point is, blockchain is not financial tools, it's an infrastructure type of tool, solution. So all of the companies, regardless if they are working in financial sector or retail section or anything, they can start working on having a pilot program regarding the blockchain. Let's say you have a shipment company, right? You can easily track all of the, you can each shipment as one transaction, right? Assume you have a gaming company. You can consider each transaction as actual transaction of your game. And you can, do some data analysis. And what is the worst case scenario? You don't want to continue with that pilot program. At the end, you have the actual data that you can use some, data analysis on top of that and use those type of data for your business future. So it's a low risk, high reward type of decision that each firm can make. And also focus on financial literacy and education. I'm not really worried about this part because, to be honest, blockchain community is really good regarding sharing knowledge and educating different people, specifically because meme coin that we have these days. So more people are being engaged in the whole ecosystem. It's not healthy maybe, but at the end they are technically they are being onboarded to the whole, blockchain ecosystem, and also monitoring and adoption. So for monitoring, we have a different solution which using Gen AI, and specifically recently we have FinGPT, which is really nice. And also we can fine tune that for blockchain data for a specific use case as well. And also based on the recent fine tuning approach that we have on different LLMs, you can fine tune your LLM based on your specific use case on your CBDC blockchain. So it could be very specific, customized type of analysis and monitoring. And international cooperation, which was about the cross-border activities. So technically, change is the law of life. So, I mean, technically, the blockchain technology doesn't need the economy or different entity to be synced on technically the actual blockchain. Either or, we will be there. So at some point, we will have CBDC in all of the countries, and it will be accessible through all the portals. So it's better to invest sooner on them, and also even if either we have a business by ourselves or we are in an actual central bank, we can start working on kind of onboarding ourselves or our business to work with different blockchains and this infrastructure. Thank you.
Discuss it now, Joseph Bitar.
Yes.
Please, if you may.
Quick comments and the recommendations. So the paper is a good analytical summary of the state of the art of the CBDC analysis. So yeah, I can see it as a summary. The analysis is of good quality, but the wording needs to be more concise. I suggest trimming repetitive ideas and sentences. So that's very important because a lot of these ideas come back several times. Difficult for reading. The abstract needs to be shortened for sure, it's too long. A lot of the ideas reproduce what has been written over the subject so far without adding an original input, okay? So maybe you can work on the analytical bit of it to add some personal input in many places. Some sections of the text can be rearranged and merged to form more targeted sections. See, so that's in the same spirit. So for example, in page 8, regulatory compliance and monetary policy implications, I recommend only tackling regulatory compliance because monetary policy implications are an intricate subject that is beyond the direct scope of the paper, for sure. I'm a monetary economist and definitely the analysis is too light. I would maybe, if I was you, I would focus on the qualitative aspects and maybe write another paper if you'd like on monetary policy implications, okay? Page 15, CBDCs, a tool for global financial stability. You can remove the term global because you did not tackle the global aspect of financial stability, okay? So again, the analysis is good, but the message highlighting the fact that a public form of digital currency alongside private ones is a stabilizing factor should be clearer. You see, you should focus on this idea of putting the public and the private in competition, which is beneficial to both. It's disciplining for both. Okay, in other terms, you can develop the idea of the disciplining effect of competition between public and private monies, okay? And lastly, in page 16, future of monetary policy with CBDCs, the content of this paragraph should be merged with other sections for sure, because it's really very repetitive, okay? As it does not tackle monetary policy specifically, okay? So these are my little recommendations. Thank you. Yeah, okay. Thanks, Erfan.
Paper and thank you.